When it comes to taxes, owning a home and renting a home have different financial implications. In this video, I'll break down the tax benefits associated with owning a home and compare them to those of renting. Welcome back to part 3 of the Renting vs. Buying series, and I want to thank you for watching and following. For those who don't know me, my name is Mike West. I am a licensed realtor here in Southeast Michigan, and I love to help educate on the entire home buying and selling experience. Keep in mind that much of what I cover in my videos are most often geared towards what I see in my own market here, and some things may change based on your location if you are outside of Michigan. I hope you find value in these videos and use them as a general guide, as your own region and market may be a bit different. In my previous videos, we went over the general costs you could expect when it comes to securing your new home as both a rental or a purchase option, so that you can see exactly how and where your money goes over the course of a 2-year time span, as well with a lot of the other potential maintenance and repairs you should prepare for. If you missed either of these videos, check out my channel and find them. There's good content there. I'd also like to express that I am not a CPA or tax accountant, and I strongly recommend you consult with a professional CPA regarding some of the topics discussed here to ensure that you are filing your taxes correctly and receiving the most and proper benefits. Without further ado, let's dive into the tax benefits of owning home versus renting. For owning, number 1, mortgage interest deduction. One of the biggest tax benefits of owning a home is the ability to deduct mortgage interest from your taxable income. For most homeowners or investors, this deduction can lead to a substantial savings. You can deduct interest on loans up to $750,000 if you are married, filing jointly, or $375,000 if you're single or married and filing separately. This deduction is particularly beneficial in the early years of mortgage when interest payments are higher. Number 2, property tax deductions. Another significant benefit is the ability to deduct the property taxes. Homeowners can deduct property taxes paid on their primary residence and sometimes a second home, up to a total of $10,000. This deduction helps reduce your overall taxable income. Investors and landlords also receive these deductions on investment properties as well. Number 3, mortgage insurance premiums, MIP or PMI. If you put down less than 20% when you are buying your home, you might be stuck paying for private mortgage insurance, PMI, or the MIP. Thankfully, these premiums can be deducted as well, though the benefit may be subject to income limits and it may also phase out in the future. Number 4, home office deductions. If you work from home and you use part of your home exclusively for business, you might be able to deduct the related expenses from this. This includes a portion of your mortgage interest, property taxes, and utilities. However, this deduction is only available to self-employed individuals or business owners, not necessarily all employees who work from home, so make sure to check with your CPA to verify that. Number 5, capital gains exclusions. This is one of my favorites. So when you decide that you're going to sell your primary residence, so long as it has been your primary residence for at least 2 out of the last 5 years, you might qualify to exclude up to $250,000 of capital gains from your taxable income, or up to $500,000 if you're married filing jointly. Again, to qualify for this, you must have lived in the home for at least 2 years out of the last 5 before you sell it. This can be an absolutely massive amount of savings if you've gained a ton of equity in your home over the years. All right, now let's talk about renting. Number 1, no deductions for your rent payments. Renters don't have the same tax benefits as homeowners. Unfortunately, rent payments are not deductible on your federal tax return like mortgage interest is. This means you won't receive any direct tax savings from renting. Meanwhile, the landlords for the properties will retain their write-offs for much of the aforementioned items, as well as costs for repairs and improvements on the home. Number 2, state and local programs. In some states, there may be some rental assistance programs or tax credits available to renters. These are not federal tax benefits in any way, but they can sometimes provide some financial relief depending on where you live. Check with your local legislation to see what options may be available. Number 3, no property tax relief. Renters don't pay property taxes directly. These are the responsibility of the landlord. Therefore, renters don't benefit from property tax deductions, while the property owners still will. Number 4, no mortgage insurance deductions. Since renters don't pay a mortgage insurance, they don't benefit from any potential deductions related to the PMI. Besides taxes, there are also some important credit building factors of owning a home that many renters do not have. Personally, I'm not the biggest fan of the credit system here in the US, but that's out of my control. So instead, I focus on what I can control and try to play the game to my advantage. One of those advantages about owning a home is how it can greatly improve your credit score and your history. As you may know from one of my other videos, the minimum requirements to get a mortgage loan like an FHA are relatively mid. But by owning the home and making consistent on-time payments, it can greatly improve your credit rating. Two of the most important things to the credit bureaus are payment history and length of history. So with a 15 to 30-year mortgage, it can be very easy to capitalize on this to increase your score over a long time. By increasing your score significantly and showing your credit worthiness, you may now have opened up the gates to a vast array of opportunities for your future, which could include refinancing your home for a better interest rate and lower monthly payment, applying for a home equity line of credit, getting better interest rates on your next car loan or lease, or get better interest rates on your car and homeowners insurance policies. You'll also have access to easier approval for loans, higher credit limits, and possibly enhanced opportunities for employment. Overall, better financial security all around. Another thing I'd like to note here that isn't talked about very often is this. Did you know that on-time rent payments actually can provide a credit improvement? But in order to do this, it must be recorded to the credit bureaus consistently for 12 months or more. Unfortunately, many landlords do not do this, as it's not a requirement, and many renters are unaware of this opportunity as well. It's also worth noting that it's not free to report it, and it could cost you a monthly or yearly fee to do so. But it's something you might want to look into if you are currently renting and looking for a way to boost your score. In either scenario, the credit boost you can get from owning a home and paying a mortgage can't be beat by a rental. To summarize, owning a home generally offers several tax benefits that renters do not receive. These include the deductions for the mortgage interest, property taxes, and possibly mortgage insurance, as well as other potential for capital gains exclusion upon selling, as well as improving your credit scores, which can vastly open up more opportunities for you. On the other hand, renters don't get any of these tax deductions for the rent payments, and their financial benefits are restricted quite minimally to maybe what local assistance programs may exist. Deciding whether to buy or rent a home involves many factors, and taxes and credit are just some pieces of the puzzle, along with much of what we've discussed in the previous videos. It's important to consider your long-term financial goals, your lifestyle preferences, and how these tax benefits fit into your overall budget. If you're considering buying a home, or just curious about how these tax benefits might affect you, it's always a good idea to consult with a tax advisor or licensed CPA. They can provide personalized advice based on your specific situation. There's no question to me that over any significant amount of time, the benefits of homeownership outweigh that of renting. Even over the course of only a 2-year analysis, it's close enough dollar for dollar of cost, and I feel the additional benefits will most often outweigh that of the drawbacks. However, I can't deny that in each of us, we all have our own needs and are in our own situations that are very unique. This decision shouldn't be taken lightly, and it should be taken with careful consideration. I highly recommend guidance from your professional local support system, such as a licensed real estate agent or broker, a mortgage loan officer, tax professionals, or even financial advisors may be helpful. After going over all this information throughout the 3 parts of this series, I hope you're able to conclude what makes the most sense for you in your own unique situation. I'd love to hear your feedback and opinions in the comments. I'm always open for discussion and varying opinions. Thanks for watching. If you found this video helpful, don't forget to hit the like and subscribe. Drop your questions in the comments or feel free to reach out to me directly, and we'll see you in the next video.